PayPal is scheduled to report quarterly financial results on the morning of October 28th, 2025, and investors are asking me if they should buy PayPal stock before the company announces those earnings results. I'm going to answer that question in this video by previewing what investors should look out for from PayPal, looking at the company's valuation on two different methods using my proprietary DCF model, and looking at the forward price to earnings valuation. I'm going to highlight some key things about PayPal that investors need to know about, so you're not going to want to miss this review and updated guidance for PayPal looking ahead. Let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one thing to note about PayPal is 2025 is going better than expected. The company's management team said in their latest quarterly earnings update on July 29th that based on their momentum, they're raising their full-year transaction margin dollars and earnings per share guidance. So far, the year has progressed better than what management was expecting, so they're raising their forecast for the performance in these two critically important metrics for 2025. Looking at the most recent quarter, net revenues increased by 5% to $8.3 billion, while operating income increased by 14% to $1.5 billion. If you divide the $1.5 billion by the $8.3 billion in revenue, you'll notice the company has a healthy operating profit margin of 18.1%, which is up by 134 basis points year over year. The new management team is doing a relatively good job in boosting the company's performance. Something that I was really excited about is the company's increase in consumers. So active accounts increased by 2% year over year to 438 million, but on a sequential basis, it was up by 1.7 million. So from quarter over quarter, they added 1.7 million new active accounts. That was really impressive for me. What was a little bit troubling is the decrease in engagement. Payment transactions per active account on a trailing 12-month basis decreased by 4% to 58.3. That shows me that existing users are using PayPal less frequently. That's a little bit concerning because that's been the biggest risk with PayPal is other companies are innovating more quickly, attracting members more quickly than PayPal, which is now being seen as a dinosaur, a company in the financial technology industry that's not innovating very quickly and is losing market share to other more innovative providers in the financial services sector. Companies like SoFi, like Affirm, Klarna, Sezzle are experiencing much more rapid growth compared to PayPal, which is growing, active account increase by 2% year over year, right? That's not anything that investors get very excited about. The reason why I get excited about that is because PayPal stock is not trading like a growth stock. Okay, so when I'm evaluating a company that's trading at a cheap valuation, these minor figures of growth are exciting because it shows me that this company could be an opportunity at these very low prices. Those other companies I mentioned, SoFi, Klarna, Sezzle, Affirm, they're doing really good. Their growth rates are much better than PayPal's growth rates, but those stocks are also trading at much more expensive valuations. 3, 4, 5, 6 times, 7 times even as expensive as PayPal stock. So of course you're going to get better growth, you're going to get better metrics when you're looking at a company that's trading at a much more expensive valuation. PayPal, meanwhile, is trading at a forward price to earnings of just 13. Just 13. I just did a video on SoFi. SoFi is trading at a forward price to earnings of 67. So it's more than 5 times as expensive as PayPal. Okay, they're not in the same industries. They do compete in some similar categories, but overall, they're very different businesses. But I'm just highlighting this because I did the video on SoFi earlier this morning, and I noticed a big difference in valuation in SoFi and PayPal. So looking ahead, here's what investors should expect from PayPal in their third quarter. Earnings per share of $1.16 at the midpoint, and that would be up roughly 17% from the same quarter last year where they delivered 99 cents in earnings per share. So relatively strong earnings per share growth from a company that's trading at a forward PE of 13. That's about half the average stock in the S&P 500, which is trading at a forward price to earnings of between 22 and 25. And here PayPal's trading at about half that valuation. For the full year, PayPal is forecasting earnings per share growth around $5, which would be roughly 25% increase from last year where they delivered $3.99 in EPS. Longer term, PayPal benefits when people spend more money online. Its convenience advantage beats companies like, let's say, Visa or MasterCard. Like, I'll give you my anecdotal evidence. When I'm shopping at a new website, if I notice when I get to the payment screen and they ask me for credit card information, I oftentimes just get out of the screen. I don't complete my purchase. A lot of times when I'm at home, I don't have my wallet in my pocket. I might be downstairs and my wallet is upstairs. I'm not going to go all the way upstairs to get my information to buy this thing I may not be that interested in buying. But if they accept PayPal and all I have to do is click, pay with PayPal and the transaction goes through, I'll make that purchase, right? So that's the convenience advantage. That's the area where PayPal has a competitive advantage. If you're shopping in person, if you're going to a restaurant, in all those categories, PayPal doesn't really have it's actually at a competitive disadvantage, in my opinion. And so when people shop online more, that gives PayPal more wins in customer transactions. And the good news for PayPal is I expect over the next few decades, a larger percentage of overall shopping will move online. Right now, it's a relatively small percentage in the United States compared to overall. The last I checked, those figures were around 19% of all spending is happening online. I expect that number to grow meaningfully over these next few decades. It's not going to be 100%, but it's going to grow meaningfully. And as that tailwind moves higher, that should benefit PayPal in winning more transactions and winning more engagement from existing customers and new customers as well. So I shared with you valuation on a forward price to earnings basis. Let me share with you my proprietary discounted cash flow valuation for PayPal. I updated this morning and I value PayPal at an intrinsic value of $135. The current market price is only $70. So this stock looks very undervalued at the current market prices. The risks are, like I mentioned, that it's losing market share as other companies are innovating more quickly. It risks being left behind. However, I do see the reward being worth the risk here. And so to answer the question, do I think PayPal stock is a buy before earnings? I think so. I think the answer is yes. And so I will reiterate my buy rating for PayPal stock today, October 23rd, 2025.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.